Hello and welcome to this fresh new edition of Mutual Fund YouTube Corner show where we discuss everything about mutual fund investing and a lot more in terms of trends and investing parameters as well. We have with us Mrin Agrawal, financial educator and director of FinSafe India Private Limited, and today we are going to be discussing about Outlook 2024. 2023 has been great in returns for mid caps and small caps, Mrin, but we need to understand with the macros in place what will 2024 look like when it comes to mutual fund investing. So thank you so much for joining us. And there's a possibility of rate cut, there's central elections, there's earnings which will kick off from next month. What do you make of investment trends in 2024?
Well, I think we've entered a very interesting phase. And, the whole year after thinking whether there's going to be a recession in the US or not, and looking at all the geopolitical situations that have happened around the world, I think now we are really looking at some good positives. So, for example, of course, the rate cuts that are expected in the US, and which would, of course, also lead to some amount of global economy recovery. Of course, India is having better macroeconomic conditions, and corporate earnings are also expected to remain steadily growing. So I think, certainly being in India, first of all, is a great idea because it does offer some amount of alpha generation. And again, looking at the GDP growth and looking at the flows that are coming in, certainly I think equities will remain to be in favor. And of course, there's a lot of retail money that's coming in through SIPs as well. Of course, there's that whole money coming in from NPS, coming in from EPF as well. So I think certainly equities will remain in favor. But of course, with exuberant markets and looking at the valuations right now, which seem to be a little stretched, I think, where mid caps and small caps are concerned, certainly it is also the time to remember some basics that you really cannot make quick money, and you really need to get ready for maybe some amount of volatility, because we really don't know how these geopolitical tensions are going to play out. We don't know how a lot of other things are really going to play out. Right now, everybody is very positive about the rate cuts. But essentially, what we need to remember is some basics that one, even if you made a great return till now, right, you need to remain invested. And of course, if you're looking at investing right now, then do not chase performance. Do not jump into a small cap fund just because you're seeing some great returns out there. It needs to fit in with your risk profile. And of course, your entire equity allocation needs to fit in with the asset allocation that you actually want to maintain. So I do get a lot of queries from people saying that I'm looking at this fund right now. But one thing I want to say, when you're investing right now, please have a long-term investment horizon, which is at least 7 to 10 years.
And that is exactly what a long-term investor should do as well. And we need experts like you to tell that to people as well. Well, you spoke about how volatility could be the name of the game next year. But are there any funds or categories that one investor should be very aware of or should look at? Do you think with interest rate cuts, debt funds would be a place where they can invest some money?
So yes, certainly I think debt funds are looking good, because if you're looking at rate cuts, then there is some amount of capital appreciation that can be made through the duration strategy. So from that perspective, if you are able to take a little bit of high risk, you can consider gilt funds also. But as such, my personal favorite at all times is always the short duration debt funds, because they are also able to capture the fall in interest rates quite well. But yes, I mean, slightly riskier, more volatile funds, I would say, then look at the dynamic bond fund. And yes, if you can take some amount of tactical bets, then I think the gilt funds is a good strategy. But of course, you have to then, time your exit as well. Certainly, given the run up that we've seen in the mid caps and small caps, you are going to see large caps turning around. So I think that's pretty cyclical performance that we keep seeing in any case. But yes, certainly I think debt is looking very good to invest into. And I would say that any investor who doesn't know, how much should I put in equity and how much should I put in debt, I would actually say, you have this balanced advantage fund category, which works at all times, because it's always doing that change of allocation between debt and equity based on market conditions. So I think they are actually poised to do quite well.
Okay, and I was going to actually ask you next about Balanced Advantage Fund itself, but that answers my next question. So what do you make of multi-asset funds? Is that something that an investor can look at next year?
They can, but somehow I prefer a balanced advantage fund, and I prefer having exposure in gold through the SGB. I'm somehow not in favor of these multi-asset funds. Also, I just find that it's a little difficult, because each fund has its own way of investing, own way of allocating and stuff like that. So I would still say, like, for a very simple investor, like a BAF plus a gold ETF or SGB, depending upon their investment horizon. And of course, you need to have at least 5-year investment horizon even for this. But yes, I would say that that's a good strategy for someone who really doesn't know, or not able to pick out schemes on their own. I think these two strategies are good.
Okay, so last question before I let you go. Generally, what should a portfolio for high risk versus a low risk investor look like? How much should they invest in debt or equity?
I think that I would still stick with my same allocation. So let's say if we're looking at a conservative investor, of course, they would be having about 60% of debt is what they would ideally go with. And I would say at least try to look at some amount in the dynamic bond fund as well. And then the balance in equity. But certainly for somebody who is aggressive, it's a good time to be in equities, provided you have that long-term holding horizon. And within equities, I do like actively managed small cap funds. But remember, they have run up a lot. They are going to be volatile, and you need to have a long-term investment horizon. But certainly for an aggressive investor, I would say like an actively managed small cap with a index large cap fund is a good choice to go with. And some allocation to debt is always good.
Okay, all right. Always helpful, your advice, Bryn. Thank you so much for joining us and taking us through what the outlook could look like for 2024 when it comes to mutual fund investing.
Thank you.
Okay, with that, we'll take your leave on this edition of Mutual Fund YouTube Corner, but stay tuned for more news and updates.